Good afternoon. I hope you all had a great day. First off, as always, we'll get into how the market performed today. The market overall had an up and down day. The S&P started up around 100 points, however it ended in the red, being down a total of 0.7%. The Dow experienced similar action today, as it started up but ended in the red, being down 0.91%. This is the first day that the market has been down in 3 days. The S&P was led by FLIR Systems, which designs, develops, markets, and distributes thermal imaging systems, visible light systems, and various threat detection systems. It ended up 9.63% after matching earning expectations. The company earned 42 cents per share in the first quarter, in line with estimates. Revenue came in slightly higher than expectations. The other stock which led the S&P today was Activision Blizzard, reported earnings after hours yesterday, which we covered. Activision Blizzard is a video game maker whose titles include Call of Duty, Candy Crush, and Overwatch. This move upwards of 6.33% was due to the company beating on top and bottom line earnings yesterday. Top line refers to revenue, and bottom line refers to net income. The company said it saw better than expected results from key franchises. Quote, as populations sheltering at home turn to our content for entertainment and social connection. Taking a look at the biggest losers in the S&P, we see that Occidental Petroleum took the title today, being down 12.5%. Occidental Petroleum is an international oil and gas exploration and production company. The company has operations in the United States, Middle East, and Latin America. Today, Occidental Petroleum came out and said it is looking at a series of options to shore up its impaired balance sheet, including raising cash or refinancing debt, a day after posting a $2 billion loss. The company is in a tough situation currently, as it made a large purchase last year, acquiring oil company Anadarko Petroleum for $38 billion. With production projected to drop another 10% by year end, the company finds itself in an increasingly difficult situation. The other big loser in today's trading session was Cincinnati Financial Corporation, who was down nearly 10%. CINF is an insurance holding company. It operates through 5 segments: commercial lines insurance, personal lines insurance, excess and surplus lines insurance, and life insurance and investments. Cincinnati's biggest operating dilemma is its potential exposure to billions in business interruption insurance claims from the COVID-19 business shutdown ordered by U.S. and state government agencies. Taking a look at this table, we see that value stocks of all sizes were ravaged today. Small and mid-cap growth stocks were the only ones able to put up green days. Taking a look at the specific sectors, we see that everything ended in the red, despite tech and consumer services. However, consumer services was barely in the green. Utilities had the worst day, being down around 3.5% on the day. With a quick glance at commodities, we see that oil is up currently, however only slightly. Natural gas and gold are also positive. Lastly, we'll look at how currencies moved today. The US dollar and Japanese yen gained strength today, as investors are seeking refuge in these currencies, as investors are beginning to see the dire global economic numbers. In afternoon trading, the US dollar index rose 0.3%. Now getting into earnings, we'll start with Peloton, ticker symbol PTON. Peloton is a provider of interactive fitness platform. Peloton provides connected, technology-enabled fitness and the streaming of instructor-led boutique classes to its members. It reported a third quarter March 2020 loss of 20 cents per share on revenue of $524.6 million. The consensus estimate was a loss of 18 cents per share on revenue of $483.4 million. Peloton's revenue roared up 66% as more people purchased its fitness equipment and tuned into its live classes. Investors took this news very well, with the stock being up nearly 10% after hours. The stock is currently trading at an all-time high. This paints a bleak picture for fitness centers such as Planet Fitness, as consumers are converting to home workouts, which may stick permanently due to fears of contracting the coronavirus in the petri dish of gyms. Square, ticker symbol SQ, is a commerce ecosystem. Square enables its sellers to start, run, and grow their businesses. It combines software with hardware to enable sellers to turn mobile devices and computing devices into payments and point-of-sale solutions. Square reported a first quarter March 2020 loss of 2 cents per share on revenue of $1.4 billion. The consensus earnings estimate was 13 cents per share on revenue of $1.3 billion. Revenue grew 44% on a year-over-year basis. Adjusted earnings before interest, taxes, depreciation, and amortization, known as EBITDA, fell 8% to $9 million. That came in at just a fraction of analyst estimates of $80 million. Quote, the decrease in adjusted EBITDA compared to the prior year period was driven primarily by an increase in reserves for transaction and loan losses, and to a lesser extent, a slowdown in seller transaction-based gross profit and seller subscription and service-based gross profit in March. The company said in a letter to shareholders. Square is currently trading down 4% in after-hour trading. Lyft, ticker symbol LYFT, reported a first quarter March 2020 loss of $1.31 per share with revenue of $955.7 million. The consensus estimate was a loss of $1.08 per share on revenue of $852 million. Lyft is an on-demand transportation as a service, or TAAS, provider. The company provides peer-to-peer transportation and on-demand ride-sharing platform, which offers ride-hailing services. Lyft recently laid off about 17% of its workforce and slashed pay for remaining employees by 10 to 30% due to coronavirus impacts. Heading into second quarter, Lyft is facing a new lawsuit in the state of California, which alleged that the ride-hailing company is misclassifying drivers as contractors and should categorize them as employees instead. In after-hour trading, Lyft is up 16.58%, but is still substantially off from record highs. Lastly, we'll take a look at GrubHub, ticker symbol GRUB. GrubHub provides an online and mobile platform for restaurant pickup and delivery orders. The provider of food delivery services reported a break-even quarter with no earnings per share, reported on a revenue of $363 million. Wall Street expected a loss of 4 cents on revenue of $358 million. Active GrubHub users jumped 24% from the year-ago period to 23.9 million. Daily orders grew 1% to 516,300. Gross food sales climbed 8% year-over-year to $1.6 billion. Looking forward toward tomorrow, futures contracts for the S&P and Dow slipped into the overnight session Wednesday evening, suggesting Wall Street may be set for modest declines on Thursday after the government's next jobless claims report. That is all I have for today. Thanks for watching. I hope you all have a great night.